Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is August 31st, 2021, last day of August. Some people think that this is the last day of summer. I know it doesn't officially end, but pretty much for everybody, it's like kids are back in school. The summer is over. My two big ones, they don't go back till next week, but the little one went back today. It was her first day. Mom was in tears. Her first daughter going to her first real school. It was I was like, let's go, we got to roll. The dad that's been there before versus the new mom. So anyway, hopefully this is the last week we get to talk about kind of reduced volumes and really kind of not I don't want to say less than ideal market conditions, because the markets have definitely been volatile in August, but there's also been some days where it's been like watching paint dry, right? That boiling water analogy. Now that we're back in as of tomorrow, we're back in September. It's business as usual. Let's roll. With kids going back, parents have gotten a new freedom that, some parents, again, with virtual schooling the way that it worked last year, this is really the first opportunity for some parents to really truly be free. Right. So again, there's a lot of exciting times coming up in the next couple of weeks with, really everything just going, going crazy. So with that said, let's jump into today's presentation and go through. So, many of you are repeat customers, and I love seeing you guys every single week. Many of you email me, and I love hearing it. I will say, I got a bunch of emails yesterday for my birthday, and a lot of you guys are people that attend these presentations, and I really appreciate it. From now on, I would just want to let everybody know I am now going backward in years. I can't go forward anymore. I can only go backward, so I'm really excited about that one. But with that said, I definitely appreciate you guys. I love when you guys are on there, and I love the communication back and forth. So again, don't ever feel that these are just one directional. You're only allowed to sit here. You guys are absolutely allowed to comment. You guys are absolutely allowed to ask questions. And again, communication is there, both with myself and with Nadex if you guys want it. So, but for those of you that are new that don't know me, I run a company called Keep Trading Simple, and I've been doing this for a number of years. I've been trading since really kind of getting into it at the end of 1999, right? Y2K. It's crazy that I can say I've been doing this for over 20 years, because you're like, wow, I'm not that old, right? But I am that old, right? 20 years is a long time. I started like many people. Like, I am not a 12th generation trader. My dad did not work on the floor, right? I started like you guys. I had a passion for the markets, loved it, really kind of found my niche inside of it. And I started with stocks, traditional options, found Forex, loved it because I loved the idea of leverage. I loved the 24-hour nature of it. Learned to trade futures. I traveled around and worked in a company teaching people how to trade for a number of years. I was lucky enough to actually work, I actually lived a block and a half away from the New York Stock Exchange. I would walk past the New York Stock Exchange every single morning going to my office, and I could look out my office and actually look at the bull. It was very, very cool that I can say that I've actually been in the heart of kind of the industry in the financial district. So very cool. I went to work and worked for one of the advisory division of one of the big three banks. So I got to kind of see things from the inside as well. And I think that gives me a unique kind of look on things. I've always been a big believer in, it's you got to understand what the inside guys are doing, especially in the markets. Big money is what controls them. The style of trading that I use and the analysis I use is based off kind of supply and demand theory. So you'll notice when you look at my charts, I don't have a lot of indicators up there. I'm not throwing MACD, RSIs, and half the other kind of, millions of different indicators they have up there. I'm very big on price action, right? I'm looking at kind of buyers and sellers, seeing where they are. And again, I'm very big on if this then that style trading. So if you look at my charts and you're new and you're kind of wondering, why does he just have a bunch of rectangles on his charts? How does he trade like that? Very simply, I'm very big on money management. I'm very big on position sizing. I'm very big on watching my risk and managing my risk first more than anything else out there. And again, I don't, using a lagging indicator is not something that I find beneficial. I think I can do everything just fine. So again, if my charts look different, just bear with me. Most people, once they see it, kind of the light bulb goes off and they absolutely love it as well. And again, that's my style of trading. So it's funny, the little one right there in the picture, she actually has hair that's like down to her butt now. She's a little bit older. I guess she was, I want to say like 1 in that picture. She's 3 now. And then the 2 boys are both 11. The guy on the right there, the one with the big smile, he's actually as tall as Melissa in the middle. So Asher's a little bit behind, but Asher has long hair as well now too. So we look a little different. We got to kind of change things. COVID transformed our look. And yeah, it is what it is. But I am a real person. Do have the family. Do have the little ones. Unfortunately, Jen is not. She's in school now, so she won't be joining us on these webinars anymore. You guys know she used to jump in and say hi all the time. So she unfortunately won't be there anymore. So since we're going to be talking about risk and mentioning charts, we got to make sure we cover our Nadex risk disclaimer. As you guys know, trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Pretty standard stuff. I still cannot do it in my sleep. I do have to kind of read it sometimes, right? Even though I've been doing it long enough. But again, if you guys have any questions about this, go ahead and message Nadex about it. But basically, what I want you guys to do is take responsibility for any time you put a trade on. Always understand risk first, and understand if you're in the market, you're at risk. That's what trading is. If there was no risk, there would be no reward, right? So this is what we're going to cover for today. We're going to cover the, basically this week's upcoming news events. If you are here, you know how much I absolutely love news. If you are brand new here and you're not looking at news releases, you're absolutely missing out. Reason why I say that is because most of the movement happens in specific times of day. We know, there are certain times of day when there are economic news releases coming out. We know there's going to be volatility. If you're not taking advantage of that, one of the biggest obstacles to becoming a good trader is time, right? If you're new to trading, you know that one of the hardest things to do when you're trading is find opportunity, right? When you're like, oh, and I sit there and I have my time and, I just, I didn't find anything. I couldn't find a way to get into a trade. Well, guess what? If you guys are following and being religious about looking at, economic news calendars, you know when there's going to be volatility. It tells you every single day, right? You can look at it months in advance to figure out when there's going to be volatility in the market. And then you adjust your schedule around when, there's potential market versus, saying, oh, I can trade at this time. And, that's a time when nothing is happening, right? It's a waste of your time. What we'll do after that is we will break into the indices. Okay. We'll look at, we've kind of added the Russell. We used to do just the 3. But recently we've added the Russell as well because of the volatility out there. It's something that we're going to keep in there for a little while. We'll see whether or not it'll be a permanent fixture. Like I said, the Russell has a lot of movement and it kind of tends to be the first mover. And with where we are with the economy right now and with tapering being cut and potential interest rates next year, I think there's enough opportunity right now that I think people should be looking at it. And, some people are unable to handle, looking at 4 main assets. Sometimes, I tend to recommend just focusing on 3. But the reality is it's out there. I know people that absolutely love trading it because of the volatility that is associated with it. So we'll keep that in there. Then we'll dive into Forex. If you guys are not used to trading Forex, don't be intimidated by it. You would trade it just like any of the indices or the commodities out there. It does provide more opportunity because there are overnight sessions when the market is really live and moving around. Right now, as we are approaching what I'm going to call the tapering season, okay, tapering followed by interest rate season, currencies is coming into kind of its prime, okay? The biggest volatility in currencies starts coming around when people start raising interest rates. Well, we're about to enter that. Like everybody always asks, well, when was the best time? Like, how do you know when to get in? Well, I'll tell you right now, the single biggest mover in currencies is when interest rates start fluctuating back and forth. And we know tapering is starting, followed up by interest rates. So this is kind of that early season, right? This is that NFL, like the football preseason, right? We're in that preseason time. It's you got to start looking at it, getting familiar with it because it's about to be a crazy market. And with crazy markets, lots of volatility, lots of movement, lots of opportunity. And that's what we're looking for as traders. Commodities. Obviously, you guys know the big 3: gold, silver, and oil. Oil has been really crazy. It's actually pulling its retrace, like we mentioned earlier today. Has not had an opportunity to kind of break through that lower level. And again, it's going back to its V formation from last week. Lastly, I will mention natural gas if we have time. Natural gas is another one that's had a lot of volatility. And as we approach the fall season, natural gas tends to get a little bit crazier. It also has an inventory report just like oil. And if you're not looking at it, definitely should take advantage of it. There's been some great setups the last month, 2 months. And again, trading it the same exact way. We talked about it last week. We mentioned it in our Nadex broadcast on YouTube on Thursday morning, and it was an absolutely textbook perfect setup with huge movement. I think it went like eight different strike prices to the top side on the short duration contracts. So it is a huge setup if you guys were able to take advantage of it. And that's it. So let's go through. Let's dive right in the charts. Let me bring up my chart window. So as you guys know, this is kind of our news release for the morning. I use this to kind of get an overview. You can use Forex Factory. You can use Daily FX. They also have a calendar as well. Old habits die hard. This is the one that I'm used to the most, so I just tend to use it. I also like this scanner at the top. So in the last 24 hours, we're seeing that the euro is starting to peter out a little bit. Dollar came in strong. I mentioned earlier today that what we've seen is when the dollar gets beaten up overnight in the European session, the U.S. trader comes on, and it's a huge surge of power. And that's what we've seen, this really kind of this dollar rallying back again. And again, you can see that the euro and the pound and both, euro dollar is still green, but pound dollar has flipped around. You're seeing this one up. You're seeing the dollar Swiss really kind of coming back again. Dollar CAD up as well. Aussie dollar down, but again, there's a couple other factors here. And, pound is not having a lot, and the euro pound is at 10. So, been a pretty decent morning. Like I said, these were a little bit higher, and they're all retracing with the European session. So far for news, CAD data came in exactly as expected, no change. PMI actually down in Chicago. Consumer confidence down yet again, and people are starting to get very, very I hate to say nervous, but the confidence level is definitely going down. It's kind of rattled. It's really setting up for a very interesting fall with right now. I mean, confidence should be higher, right? I mean, we are coming out of the, this time last year, nobody had any idea vaccines weren't really coming out. We couldn't get it. Basically now everybody that is vaccinated can get vaccinated. We have extra doses that are actually expiring. Yeah, consumer confidence is starting to kind of degrade here. And there's a number of different factors involved with it. But again, another month of a miss to the downside. So that's not always the best data. Tonight, Australian GDP quarter over quarter. This is going to be a good one. As I said, I love these nighttime releases. If anything, you guys, if you're going to learn anything today, go check out these nighttime releases. These are amazing trade setups, guys. Every day, with my kids, it's always bedtime for me, and I don't get to stay on and do as much nighttime trading with my students as possible. But every single night, my students, and you guys knew if you guys are listening, you guys know who I'm talking about. Every night they're talking about Australian trade setups. Every night they're like, the Roo took off again. The Roo, the Discord channel has, pictures of kangaroos all over the place because there's so much opportunity at night that nobody ever looks at. People are so focused on just these morning time hours, but these Australian news trades are awesome. And again, you can take them with Nadex, and there's a lot of different things we can do with them. So again, 9:30 p.m. tonight, awesome trade opportunity. Going into tomorrow, first day of September. Look at that. The evil empire is starting off all day with OPEC and OPEC JMMC, the OPEC Plus group. So we're going to get our API oil inventory reports later on this evening. Okay. Now, I'm very curious to see what kind of numbers they throw. Again, we just did have a hurricane. It caused a lot of damage. We haven't really heard about any kind of oil infrastructure issues yet. But anytime they can take advantage of something, remember the API report is an industry report, industry-based report. What does that mean? The guys that are profiting from the reports are the guys that profit from oil, or are the guys that are giving the report? So it's kind of like, could they potentially be biased a little bit? Yeah. Is there any recourse if they don't give 100% accurate information? No, there's not. That's why the EIA report that comes out tomorrow morning for oil inventory, there are repercussions if you fudge the data a little bit with tomorrow morning's report. So that's why they are different a little bit, right? So I'm not saying that that's what could happen, but it could happen, right? But with OPEC talking, remember September, there's supposed to be an increase in supply. We haven't talked about it for a while, but it was, kind of passed by that OPEC Plus group. That they were going to start, kind of producing more supply. More supply means lower prices, right? Because as you increase supply, it should go the other direction. They could probably throw some headlines into it, right? Now tomorrow, also because we're back in September, we have the ADP non-farm employment change, the ADP version. Again, ADP does, I think it's like 1 out of every 3 paychecks in the United States comes out of ADP, so they have a lot of control. Looking like a good push. I mean, again, the forecast is 620,000. I mean, consumer confidence is down, but people are getting jobs left and right. And I'll tell you right now, employers can still not hire people fast enough right now. So it's funny that people are getting very concerned. Wages are going up. There's demand for people to work, and yet confidence is going lower and lower. And I think a lot of that has to do with some of the kind of geopolitical events that have been happening. And then we have ISM manufacturing, another gauge of, kind of an early gauge of inflation in the manufacturing side. So that's a big number at 10 o'clock. Again, 8:15, big number. 10 o'clock, big number. Anytime OPEC feels like moving the market around, there's going to be a big number. Crude oil inventory is expected to be lower, and again, they have been. Last time they were minus 3 million barrels worth of inventory. Again, great trade setup last week. It was kind of where it was a little bit of a funky place. We picked the direction, absolutely right. Again, was it the ideal setup? Not perfect, but again, the strategy that I've talked about again and again and again and again, as far as how to use it for news, worked out just fine. And again, the next education summit, I'll be doing it on gold and I'm sorry, not gold. I'll be doing it on crude oil and natural gas, and I'll be talking about that news-based strategy. So make sure you get in there. And then we have Bostic, who Bostic is like, hey, start the taper now. We need to start it. And I mean, Bostic has been pretty vocal. There's about 5 or 6 vocal FOMC members that have said, hey, listen, we need to start the taper now. And again, remember, they're always a little delayed. And, Biden even made a comment about it. So wouldn't be surprised. But that is tomorrow as well. And then Thursday's kind of one of those days. Again, Bostic is speaking again, but we have Australian retail sales, which I'm actually pretty excited about that. The forecast is minus 1.9% month over month. I think that this week that number may be a little bit overly negative, right? And what I mean by that is if it comes in at 1.5, technically, right, you're like, wow, that's less sales than last month. Not great. But if it's not as negative as what the market thinks, that is positive for the Australian dollar. Remember, New Zealand didn't raise last month, but they said it had nothing to do with COVID or anything like that. It had to do with a communication issue. And they were talking about potentially raising it 50 basis points because, hey, listen, we know people are still going to buy stuff. It just pushes it down the road. So there's no point, there's no reason for us not to do it, right? It's going to eventually start rolling over in Australia as well. We start seeing those retail sales there. Yeah, that could be a good number. Again, this could give us a strong little boost right there. And then Friday is the big one, right? First Friday of every single month, we have non-farm employment change, NFP, the big one. 750,000 jobs created. Again, that's a huge number coming off of the 943 last month. Again, talking to kind of some of these service industries, they just can't. I told you guys the story a couple months ago. My wife was mad. She was livid, right? I mean, she's pregnant. She shouldn't actually be eating sushi, right? But her favorite sushi place is closed on Tuesdays because they just can't get employees. They don't have enough employees that are willing to work, and that like the staff needs a break. She was pretty upset about that, even though she's not supposed to be having sushi. But you know how that goes. Pregnant woman wants sushi. I'm getting her sushi. Unemployment rate is also supposed to drop to 5.2%. And again, remember, consumer confidence is going down. Unemployment rate's dropping, but people are getting more and more and more concerned. And we're getting to the fall. Fall is election time, and getting a little kind of getting a little spicy, right? ISM services at 10 o'clock. Remember, ISM manufacturing is early in the week on Wednesday. Services are on Friday. So again, Friday is kind of an 8:30 kind of bang punch, followed by a 10 o'clock, maybe like, hook or uppercut or something like that. So we could have 2 in a row, right? And again, they keep saying all this transitory inflation. I don't know. It's picked to be lower. It's not negative, but again, the prices on the services side are lower, but could they potentially be too low? What happens if this comes in at 63? And again, all the tapering talk, everything else. So a lot of things are coming in this week. A lot of things. Again, it's one of those news weeks where the first week of every month is always big. I think there really can be some big movement this week if we're able to take advantage of it. But right now on a Monday, again, it's Monday. All the news out this morning was not earth-shaking. Wednesday and Friday are the big days, absolutely without a doubt this week, and that's what we're going to have to take advantage of. So with that said, let us now jump over into the charts. Okay, first things first, the ES. We always start off with the S&P 500. It's an easy one. So the S&P 500 had a great trade setup this morning. We always talk about, when we do our analysis of the indices, first things first, we always lower our time frame. And the reason why we lower our time frames down, simply because these are more day trading based products. They're not, yes, I love when futures people tell you that, oh no, futures, it's a 24-hour market. It's just like currencies. And the answer is no, it's not. Yes, they are open, but the volatility shrinks up, dries up basically turns into a raisin in after hours. Really, it starts to dry up aside, in the afternoon minus the last 30 minutes, it really shrinks. A majority of all their action happens from 9:30 till about noon, and there's a little surge in the afternoon. But I mean, go ahead and look at 9 o'clock at night. How much action's happening? And it's like none, right? Currencies have that Asian session, and then we have the European session. So I mean, again, tends to be a lot more movement. But you can see this one is very, very spiky, and then we hit 10 o'clock, and it does nothing, right? And then a little bit in the overnight, and then again, this is the European session drove this down. But bam, look at this big little candles though. It's like just slow grind on a Monday. And then all of a sudden, woo, big candles again when market comes out. So great setup. Again, very, very easy position to grab. You guys can see we had some basing here at 9:30 on the 30th. Nice punch forward, right? Nice punch forward on Monday. And then again, today we pulled right back down to that same level where buyers stepped in on that Monday, that slow Monday, and again drove us back higher. So, positions out, the 1 to 3 has already occurred. At this point, we're running back into some sellers. I wouldn't say we're at an extreme level at this point. Again, we were always talking last week, we were talking about hitting that 4,500. And again, we did. We hit it. And, I'll mark it off. You guys can see it right there. There was our number. We hit it, we drop. We hit it, we drop. We hit it, we based. And again, came up. Weekend occurred right here, right? Weekend, up. Boom, Harry Potter trade. And you guys know what the Harry Potter looks like. Up, back down to the levels that were areas of sellers now are buyers, and boom, off to the races. And that's exactly what happened. Punch, came through, came back and grabbed that same level, and bam, off to the races, even with all this kind of just snooze, right? Snooze yesterday. Okay, look at this. We're going to talk about snooze. I mean, here's the European Open, and it did nothing. And then all of a sudden, what happened here? 9:30, boom. And this is why it's so important to kind of grab these opens. So trade is good. I would say watch out for that level again. I don't have a crystal ball. I can't tell you what it's going to do the rest of today, but I can tell you if it gets back down to that level. That is approximately down there at 45.13. I think that's a pretty decent level. Again, if we can time it with either a European Open or even like a regular. I got a message from my wife. She must have heard that sushi comment. Okay, it wasn't her. It was my son. Okay. I was like, oh, man. Oh, I forget that she's in the office next to me. So I make comments. Not that it's bad, right? But she's like, stop picking on me. Anyway, I think that level's worth one more hit. I had a good reaction off it to it. It dropped very, very fast, popped very, very far. But that risk level is really from 45.13 down to really 45.09. And it's a decent level. And again, if we break through there, again, I really love session opens with this one. I think that's really kind of just one big trade a day out of them. We have another level, again, using the 4,500. It's really 45 or 43.50 down to that 4,500. I think is also another level. Again, it was an old top, and we hit it forever. We got super close, front run a few times, bounced, based, which we love, and then boom, all took off to the races. I think that's another level we watch out for. And again, I would say later in the week, I mean, again, tomorrow and Friday, if we're coming down and we're starting to really put a lot of bases in, 4,500 will be a psychological level because it's got zeros in it. If we kind of break through sideways, I think this absolutely could tank lower. And again, if we do break through that 4,500, I would say keep this on your radar down here. The 44.67 is the next level where, again, buyers have stepped in. They had a platform. They were basing through it. They were building, and it launched forward. Watch out for that level. I think that's a decent level. So kind of the two levels that I'm looking for. Again, a break of kind of the 44.90, again, coming lower. But I think we got a couple of different buy opportunities in the next couple of days. And I do think that the all the payroll data this week should be good. Like I said, it's always kind of hard to pull that data at the through August, but again, all those things are typically seasonally adjusted, and like I said, seeing the earnings go up, particularly by like 1.1%, those are good signs. You start paying and offering people more money, people go back to work. Especially now with kids going back, it's like, yeah, let's go back. NQ. NQ had a similar term. This one, unfortunately, I mean, this is what I talk about this with my students. This pattern right here is called a wick over wick. It's tradable, but again, when you can't see it on a 15-minute, sometimes it meets the rules. But again, when the lower the time frame you go on, you always want to be a little bit more cautious. Again, you don't want to keep changing time frames to come up with a picture of a preconceived notion. Right. Hopefully you guys know what I mean with that one. Like it's like, you guys know that I'm all about, I enjoy fibs. I like throwing fibs on there. I love showing you guys fibs. But one of the problems that I have with fib traders that swear that that's all they need, is they'll draw 5 different draws with fibs. Eventually, just by the law of numbers, it will match up if they keep drawing it from different points. It's kind of like the same thing with L8 Wave. It's like, no. It works every single time in hindsight. Fibs is the same way. I'm going to do the draw from here, and then I'm going to do it from here, and then I'm going to do it from here. I'm going to change this. I'm going to do it from here. There, see, I told you it worked, right? Kind of the same thing, right? So yeah, I could have dropped this down and said, hey, this is a great trade. You should have absolutely taken it. But yeah, it's one of the formations that I look for. But again, this one turned. It looks like it was more of a follower. You can see right now it's the weakest of all of them. It's down 0.17%. Everything else is basically up just slightly, so a little tiny bit today. And I would say kind of the same thing. I mean, you can watch that zone. There's a lot of basing that occurred down here. If you want to look for a potential level, I would say that 15,455 is probably a level that, if we can get, a push down there. I mean, if we can just be negative and grind down, and you may say, well, why would, I mean, everything's green. Why would it be negative? Well, if we're doing some selling, I mean, on a technical basis, you want to talk about trends. I mean, you got to touch, you got to touch, you got to touch, you got to touch, you got to touch. I mean, there's five touches of that trend line, right? If it goes down, I mean, I don't think anybody would be surprised. If you're building a channel, we're on the top side of the channel right now. Bollinger Bands were probably kind of peaked on the top side as well because we had such a quick spike. So a lot of reasons why it could go down. Do you want to jump into it? Is this the time to get long? Not really. I mean, it's lunchtime. There's no traders in the market right now. Volume is obviously very low. And again, if you take the trend from the open, the trend has been nothing but straight up since the open. So, you could do kind of the exact opposite and say, yeah, overall it's this way. But wait, since the US trader came online, it's just been straight up. And this is why it's a market, right? There are buyers and sellers in the same market. So, I like to, rely on the past a little bit and say, hey, listen, something happened here that launched this market higher, right? And again, it was a Monday, right? Monday market open, but they really wanted to drive this market higher. So if we get back down into there, there's only one thing that causes this much momentum is called big money, right? So, that's what I'm looking out for. I'd say 15,455 as a level I'd be looking for. Top side, I don't really have much reason to start dropping shorts in here. So, I would say wait for a pullback. I mean, there's a small level. I mean, if we start to pull back down again, you could use the level that we are at. I'll just bring this here so you can see it. There could be an argument made saying, hey, listen, we're getting to basing right here, Brian. Yeah, sure, we could. I mean, if we pull back down, right? If we pull back down into this level to grab these buyers and come up and it doesn't breach the top, then yeah, there could be a potential short there in the afternoon with us ending red. Sure, yeah, it could. But right now I do like the ES a little bit better. Now YM also had kind of that same thing. Yeah, we were looking for buyers to step in just a bit lower. I mean, we saw them and there was a little bit, again, this is a weird kind of candle formation. When I say weird, I just mean that it is not what you typically see. There was a little bit of a bump up and then kind of it gapped a little bit higher, but then came back down again. Kind of a little bit of a funky kind of move there. Again, a little harder to draw. We went with just what was easy and ended up missing the entry, but it kind of did the same thing. We drove down and like I said, the ES, the NQ, and the YM, they all basically had the same open. Does it mean you should have placed 3 separate trades? No, you find the one that gives you the best, the easiest, cleanest setup, which was the ES this morning, but it did the same thing. I would say watch out for 35,000. We ended up tagging that supply zone there. Early morning, 2:00 this morning before being, retreating back again. 35,500 again, psychological level, kind of one of those 50 numbers. I would say is decent. And again, this has been an area I'd watch out for. I mean, really, right now, I think we're gonna have some channeling. I'll just take this one over here. This one had too many hits, right? 1 here, 2 here, 3 here, 4, and then that's where I was like, nope, not interested, and it broke through the top. So I would say right now, I mean, I'd say it's similar to NQ, right? In the essence that we did have a pushback up, right? We had this impulse move, this corrective move before an impulse down. There are some large bodied candles coming out of there. We just hit off of that and it punched down, and we're kind of there now. And again, lunchtime, but could the profit taking, again, this is a 945 candle. We've been in an uptrend all morning since the US trader stepped in. Is it time for profit taking to come in? Could there be a reversal here? Sure, there is. If you wanted to take it, again, make sure you're in a limited risk position. Do we have at least 1 to 3 to turn and run to the downside? If you like that area, sure. And again, this is not a trade recommendation. This is, if you guys like that, it doesn't need to move that far from that level, but at least it's close. Got a couple hours to go, so some of the time premium has been snuck out of the dailies for the morning. Could it move? Sure. Yeah, I mean, maybe. But again, it's all about, managing that risk. Is the 35, 493 a better level? Yes. It is a better level. It's higher up on the curve. It's a level that we really haven't seen. It's a psychological level. We've seen it barely peek its head up and get kind of hammered right back down again. Is it farther up in the curve? Yeah. I mean, these are all reasons to stack the odds in your favor to be able to take this one. So, yeah, I would say that I like that level better, but it doesn't mean that you can't be more aggressive than somebody else out there and like this level we're at right now for sure. Russell. So Russell has kind of had an interesting. It had a crazy move on the 27th. We pushed higher, and again, I can adjust some of these. I didn't adjust a bunch of them. You can see that we haven't really been able to get back up into that 2282 area. It had the same kind of peak down. Did it have an area to turn at? No, not really. It had this huge push up at 930, and then it's really been kind of stuck in that same. And again, I'll just mark it off here. Like it's been stuck in this channel, right? We came up, we went down again, the same place where this hiccup was. We went down again, we went down, went back up again, and kind of pushed it again. So I would say that it's more or less channeling. It's technically up the biggest right now at 0.25% or 0.24%. But if you look where we're at, is there an entry? Nothing that I'm really in love with. I mean, you could say that, here's an area of basing right here. We kind of got front right here and we're kind of approaching it. Is it the extreme range? No, the extreme is really kind of up here. So, I mean, I would say that this is really a better level up here. Is it fresh? No, it was marked off from another time in the past, and we have a big hit here. We have a big hit here. So is this even the best level? Maybe like a B rating for me. So, that's why I said the Russell on some mornings has immense, just giant movement, right? And again, this is 930, huge push. 930, huge push. 930 is right here. It was spiked up, almost hit, and then boom, big push. So the 930 candle for the Russell seems to be the big guy. And again, at 12:30 in the afternoon, are we going to see that same type of movement? I mean, not really. I mean, here's 12:30. What did it do? A little bit of movement, and then just a little end of the day stuff and nothing. And then again, this is morning, and again, first candle, first move off the first candle, right? Here's the first candle, huge. So Russell is an early mover is kind of what I'm trying to get at here. So, again, of the four indices, which one of the best set up today? It was the ES. Tomorrow morning, I would do the same exact thing. Get in there, look at your 15-minute levels, even 30s if you want, see kind of where we're at. If everything turns pretty negative, I would say that this one, because of the nature of what it did on the 27th, right? I would say that this one is going to be at risk. We don't really have a great stabilization point yet. But again, there'll be people that as soon as this breaks 2254, they're going to take this thing short all the way back down to 2217. So just be aware of that. This is one of those pivots that a lot of people are like, oh, I know this strategy. This is a support and resistance thing. As soon as it breaks, that's it. And everybody knows that. You put your stop loss on the top, and what's going to happen is it's going to go up and get stopped out. That pullback would be more of an entry than when it breaks through this pivot. So just be cautious of that. Okay. Let's go across to the Aussie. So we were sitting right here this morning, right? Let me go back up to a 15-minute. I was like, that's way too many candles. We were sitting, and I'll just draw it because it's easier to see. It doesn't have all the highlights coming up. Right, 8:30 candle is right there. So that's where we were earlier today, that yellow circle, if you guys can see it. Again, all it did was it completed. You can see this big piece up here. That is the European session open. So, as of last night at 11 o'clock p.m. Eastern time, this thing took off, right? It went crazy. Those are amazing trade setups. This is a parabolic retracement base move. In one session, it went straight up with almost no pullbacks, no red candles, all green. Got up to a level, and again, this is not a new level. We've talked about the 73.34 for a while, right? For a while. And in essence, we could have actually shrunk this a little bit. We took the whole basing level. If you wanted to take it up to the true pop, right where the tops are, you can see that it ended up coming in just the same, right? And it went well past its 1-to-3 risk to reward ratio, right? There was your 1-to-3. In fact, at this point, we were all the way down in a 5-to-1. It's currently at 1-to-4. So plenty of opportunity there. Old level from last week. I would say the way that it responded off of that, especially being able to stop this big parabolic surge, it's probably worth one more. Profit targets to the downside. Actually, this should be green with black letters, right? Because that is the overall base target that we're looking for. I would say, I mentioned it in Nadex presentation today. I like this one for a setup later tonight. If we come through, and again, the way it looks like it still wants to continue to push lower. Again, dollar strength coming in strong. Level of basing here, a lot of buyers stepping in, right? Saved it. Next push through, it's going to be a big test, but could we have a push all the way down with a breakthrough? Yeah, I think so. I mean, it's more for the Australian news here, right? And again, we're not close, but again, Harry Potter base move. We want some basing in there. Look for a collapse through, and again, we can get a push down. I would say first profit target. I'd say first profit target needs to be down here, 72.50-ish range. It's a decent mover. Let's see, break of that level. Yeah, about 38-40 pips, so not bad. And again, there's a potential reversal level at 72.23. So I like it. Again, if we get to the end of the market, I mean, at 1 o'clock, if this thing all of a sudden starts, all those dollar people start being like, yep, we got our money, we're out, and we rally back up again, I think the 73.37 is decent for a short. I like this one. If we can get the correct, breakthrough, the 72.88 is another break on that one as well. And again, profit target's lower. And for some reason, if this thing absolutely goes wild this afternoon, again, 72.23, I think are all valid entries for later on tonight. And again, that news is right here. And you can see how often they're correct, right? And if you look at it, right, if you look at it, you can see what, again, way too focused, way too focused, way too focused, and now it's 0.5. Again, is there the opportunity for them to be off? You can see September of last year and June of last year, they were good, but the whole rest of the time, right, they're off, right? So some good opportunity there. Also yen. So off the yen ended up turning off of an old area of interest. And by old area of interest, it was an old area where we hit it again. We came up and based, and it's like, look, it's something about that level that is special, right? Basing in here, touching, basing again in that same level. Well, guess what? It came back up and it's basing in that same level again. The seller is sitting right above that area. They're pretty strong, right? So we can mark it off. Again, the yellow is the area of interest. If you're looking for kind of entries into this one for later on tonight, you could take it probably there. And again, we're a little bit below that right now, but I would say that they're sitting at right around the 80.56 range. And again, this is for kind of the news. You can see the news right down here, right? When you click it, there's the real the GDP number, right? So it's actually more, would be right there where we'd be looking for that to push. So it's got some room. It may go early. Sometimes they do that. Remember, news doesn't tend to change the trajectory, right? Like economic news does not tend to change the trajectory. It's funny. There's a big debate where there are people that I know that they're like, nah, news doesn't change anything. Not true, because if one country invades another country, that's technically news, and guess what? That will change the trajectory. For things that are geopolitical based, like, I don't know. I mean, if country X nukes country Y, guess what? Things are going to change a lot, right? And some of these levels are not going to hold. So it's hard to say that it doesn't change things, but like things like economic news releases that we know every single month it's going to be the same thing. They just tend to use these zones. So I mean, if this comes up a little bit early and tags that level, again, I wouldn't be surprised if this one rolls back to the downside, right? And again, that would be showing Australian weakness, right? So that would be like, hey, listen, it's supposed to be 0.5, but it came in at 0.3. That would be technically bad for the Australian dollar. Okay, sending us a news release. Now, if it does run all the way back down again, vice versa, it could be set up for a long as well. I don't know. We still have 9 hours to go on that one, but I'll mark this one off just so you guys can see it. Coming down to that 80 level. And again, 80 is a psychological number. You can see in the past we had some basic and a nice pop, a test, and a test, so it's done it twice. We obviously like first or second test better than a third test, but it's there, right? So again, watch that for the Aussie yen. Euro pound. So Euro pound's got a lot of movement, but really hasn't left the zone much. Remember, we had that one short last week. I haven't adjusted this one. And I said I haven't really been taking many trades off the Euro pound. The reason why is, as much as this looks like, oh my God, this is so much movement today, we're talking about 30 pips total. So as much as that looks, it's 30 pips total. And all it's done is run right back down, starting at 6 o'clock this morning. And we are now within 11 pips. In 24 hours, this one has moved 13 pips. It hasn't even moved 1 pip an hour. I mean, it has. It's dropped and gone back. But if we drew like an equilibrium line here, we're kind of just on the upper side of the channel, right? On the upper side of the channel. So, this one was out from last week. I don't think we need to worry about it right now. Taking this one up and looking kind of on a grander scheme, though, or a grander scale. As you can see, if you take your highs and your lows here, we're kind of like at the upper reaches of that no man's land, right? In that kind of middle 30%. Overall, on the large time frame, the big moves, we're still in the green, so we're looking for some longs. Again, it's still showing more kind of European strength, pound weakness. I do actually think right now with the data that we've heard, things like the Eurozone hits a 10-year high. We have a meeting September 9th. I do actually, on a temporary basis, think that we may have some opportunity here to trade the euro. Okay, so I do think that would be pretty good. Just kind of what I'm looking for, but right now I would say on a small kind of intraday basis, it's rallying back up again. European session really kind of started here, shot us up 6 o'clock reverse us, and we're kind of going right back up again. So, that market is closed for the day. So this one will really start to kind of go sideways and tanks. I don't think there's any great opportunity. And again, we're far enough away now from these lower levels. I mean, we're talking about 50 pips. This one only has a 32 or 33 pip ATR for the day. It's going to be 2 days before it can get down there. So we really need some blockbuster news. And I don't think we really have. German manufacturing will move it a little bit. Spanish unemployment, not so much. And Friday, not much in there. So not a big week. Not a big week for the news for this one to drive. And like I said, use this as a proxy to determine whether you should be going euro dollar or pound dollar in your trades. Now, euro yen came up. We had a level that we talked about at 130.05. You can see it came up and actually peeked its head right out. It did base in there before dropping. So we could actually adjust this a little bit and talk about how this was our old level. And, again, the next time that we push through, we can talk about a level just a little bit higher. It went back and again, 1030 right here, the green candle, the green base right here. Again, could you have made a case that, there was a level down here? You could have said yes, right? Because again, it hit. These two have been kind of the early hits of that zone. It was a 1030 reversal off a 30-minute area of buyers. So again, it's a trade that we can't do anything with now. Target would have been back up to this other level, probably at 130.05. Not much we can do with it right now. It's still kind of in between levels, right? I would say that this is still a downside target. We've been unable to truly get back to it. Let me see on an hourly if I can find anything. Not really. Yeah, I would say that this is the next super clean short up top is the 130 level. Problem is, if you look at this right here, there's not really like a good quality zone. This is one that's been tested and we know that it held. So I would say the next decent short, again, we can move this if you're looking for something small. Let's say you could, potentially get in there. The 130.45, I think, is a much better level. It's only about 56 pips away. So I would say that this is probably more of a tomorrow type entry, which would be right about there, right? That would be a European session open right there, if we can continue to rally up. I'm afraid, though, in the overnight, this is what we're looking at. Again, like I said, European market is closed. Asian session may come online and kind of give us one of those, a 130.08. Okay, but not really a huge mover right now. Euro pound. So euro, again, we've been going straight up, and then again, this one 7, 8 o'clock, we got a reversal back down again before coming back down at this 11 o'clock, 10:30, 11 o'clock time frame. Put it on a 30-minute. So kind of the same principle, right? We talked about a level sitting here, and again, we hit and pulled back. The basing changed, though. Right here, you can see that the basing changed from this level and kind of came up. I would say that, again, here's a majority of the candles, right? A lot of the candles pulled back down again, hit it, came lower, pulled back in. Base, and then finally kind of went through the top. So again, it's one of those ones that we had talked about a short from it, but after it hit and started the base below, once it came back up into that same level, it's kind of like, yeah, this is probably not the best trade setup, right? We're looking more for a break. Look for a Harry Potter kind of collapse in this one from here, right? At this point, we can kind of refine a little bit, but it's a decent runner, right? That's about 47 pips to the downside. So, you want to put yourself when, and again, I don't know when it's going to break. You could do it tomorrow, you could do it Friday, you could do it Thursday, but 1 to 3 is right there. So again, not a bad little place. I would say right now, again, we've seen this one rally up, a lot of dollar weakness. 7:30 hits, 8 o'clock hits, really the strength came back in. Okay, we talked about this. This was a European, really kind of an overnight move up. European session kind of helped it. And then all it did was it brought it right back down again. So all the momentum that we saw from late last night has literally been retraced, and we're kind of in the same position. So on a 24-hour basis, we've only moved 13 pips, right? This is currencies. It looks like a ton, right? And I guess it was decent, right? I mean, it was 50 pips up and then 50 pips back down again. But we're in the same exact spot that we were, at this time yesterday. So I would say the long is not bad. And the reason why, you may say, well, wait, there's a red here. Yeah, well, it hit it here and then it hit it here. I think it hit it one other time. Yeah, it hit it over here. So we've hit it so many times at this point, and it's been broken through. It's not one we really need to worry about, so we can just remove it from our analysis. Right now, and again, if we wanted to refine this down a little bit to this level, I would say looking at this candle, I think we're clear pretty much until we get back up to probably this level here. So you can see there's quite a bit of room to run on this one to the top side, right? About 30 pips more. So again, 10:30 reversal, 11 o'clock reversal this morning, you're up in the position. It's a little bit over a 1-to-1 at this point. So you'd have your stop loss at break even to where you can't lose it. And again, these are those situations where you're always looking for the shorter duration contracts, looking for the moves, particularly the call spreads. Reason why is a call spread doesn't have a value that you have to be past. All you got to do is be in the profit. And again, it's not a 0 or 100 type scenario. So if you do get great movement, you do great on it. If you get a little bit of movement, it's taking out a break even or maybe even for a little bit of a profit. It's a little bit easier than a binary, right? But decent setup. If you guys are looking for the short, and again, the short, I think it will come at some point this week. Like I said, I don't know what day. I just think it's right there. I don't know what day it's coming, but if it does come for this week or whenever it does come, because it eventually will, break a 117.81 for me with a bit of a pullback is a nice little push down. And again, with the way that this candle is formed, I think this can get back down to the 117.40 range. Pound yen. Pound yen is pretty boring. So we had an area up here that I mentioned last week in the presentation, 151.64. We did not get into it. You can see though right here was that European session open. So if you were looking for a trade setup, this would have been the way that you marked the zone with the aggressive entry. Again, it was a top at a session open, and it came back up and grabbed it at 7:30 this morning and pushed back down again. So again, this is why, again, set and forgets are wonderful. They're great. They don't require a lot of time, but unless you're constantly looking for the newer levels that are forming, i.e. session open levels, you're not going to catch all of them. So again, 51.64 is still good. If you were looking for a short, you're probably out of position right now. It definitely moved. If this was probably a 1 to 4.5 ish to the downside. Is the pound yen trading right now, or is it trending? No, it's 4 pips in 24 hours. It has a daily ATR of about 115 right now, 115, 120, I think. I know it's starting to constrict a bit. We actually just dropped because of Monday, but right now it looks like 102. About 102 is what this one is doing a day, and 102 pips average per day, and it's only moved 4 in 24 hours. So you can, hopefully you guys can understand that this one is not moving right now. Okay, not enough catalyst. But and where we are in the curve, again, I think 150, as a round number, I think is a great target / entry area. The 151.64, we haven't been able to get up there. Again, we got hit with the aggressive kind of shorter time frame level this morning, based off of this open from the UK market. There's probably some drops in here, but like I said, this was an old area of interest. We'll see what happens with it. We can move it even a little bit lower, but there's not a whole lot in this one right now, and really not a lot of news this week to justify much movement. But I would say everything right now is based off of the yen, not the pound. I would assume that this one comes lower, probably test this level right here, right? And it's it's decent movement. I mean, it's 40 pips to the downside, right? 40 pips to the downside on that one, but not really a whole lot of set and forget, something that I'd be like, hey, that's great. I mean, later in the week, sure, but nothing today, unfortunately. Pound yen. So this is one of those levels that is extremely frustrating. We had a level here, the 137.87. Talked about it multiple times. Got front run and dropped. Front run, dropped. Weekend happened. Was going through the weekend, broke through that low. We're like, all right, cool. Took off. And again, that was the trade from last week. Here was a decent bottom. And again, it's kind of hard. You'd have to mark the whole area there. And it did hit and take off, but kind of a little bit big, but was a decent one. Decent push up. Talked about this being the European session. We talked about the target down here at 137. It kind of gave us two different entries, right? It came all the way down at 5 o'clock. We got super close to the exit, didn't go in. Came back, gave us another one. Came back, hit the same kind of level right there. Went all the way down, missed it, and then went crazy. Spiked all the way up 10:30. And again, this is the European Open. That's your 10:30 candle. Okay. Had you been a spot currency trader and you were using that as your risk level, or maybe you're even brought it a little bit higher because that's where the high was here, you got stopped out on this position. If you were using this as your level, saying, hey, listen, sellers have really been up there. It was tested here. Here's my 9 o'clock. It's rallying up again. I'm looking for a reversal because 10:30 is right here on this red candle. And you had taken a Nadex binary contract. Guess what? There's no such thing as being stopped out on a Nadex binary contract. Since that time, again, if you were playing the reversal, this one has had a nice run of about 45 pips to the downside. For those of you that don't know, look at the short duration contracts, particularly the binaries. Again, during the most bits of movement, look to see what the strike differential is. 40 pips is a lot of binaries in a very short period of time. Again, 30-minute window, prior area of sellers at 10:30 for reversal with a short duration contract. We know that they're they're small. A lot of movement. A lot of movement in a very short period of time. Like I said, top to bottom on this spike, 65 pips in an hour and a half. A lot of movement. But overall, what have we seen in the last 24 hours? -4 pips. -4 pips. So again, this is why we focus on those shorter durations. So again, great little setup there. Dollar CAD. So dollar CAD, we've been talking about, this green is really just the channel sideways that we've been talking about, kind of capturing back and forth where we're on top. Again, we had buyers down here. We talked about these buyers at 124.74. It was initially a target, right? And again, took a nice little bounce off that level. I'll move this green so you guys can see it. We ended up touching it here and spiking. Touched it again, touched it again. Again, this is one from last week that you guys knew about. Where it turned, it kind of just turned here in no man's land. And again, it was like that 11 o'clock reversal. From really this morning, again, the next presentation, I talked about it. It had been weak, right? It had been weak all night. And then all of a sudden, off to the races. Unfortunately, the CAD right now has been a little bit more difficult to play because oil has been controlling it. It hasn't been so much of a CAD play. With the CAD news today, it didn't really give us any type of miss. So kind of one of those things that it's a little bit harder to take advantage of. Right now, I would say probably avoid this. I mean, again, I like this one going up top. We've talked about this level for a while. We're not even close to it. Unfortunately, right now, we're kind of in a racetrack. There's nothing really stopping us. And again, for those of you that are aggressive, that like entries, or like if we're at a session open, right? A 126.99 or one, actually, I guess it's a 127 flat is really what this is probably at. Yeah, it's 127 exactly. It's an area where the last time we were there at 9:30 session open, huge push to the downside. So I would say 127, 127.02, or I'm sorry, 127.20 if you're a bit more aggressive. 125.75 is the opposite side of that one, is our really top and bottom. But again, we've been, oil up, oil down. Is really, but when this is all oil based right now. And again, API tonight, OPEC Plus tomorrow, EIA tomorrow. So there's a lot of news in this one, and I'm really kind of actually what I'm kind of hoping for. I'm kind of hoping that like we push down, right? I'm hoping that we push down, which would be more Canadian strength, and then I'm really hoping that the inventory report tonight is wrong. And I'm hoping that OPEC Plus says, yep, we're going through. Prices stabilize. We're up in that, $70 range. Yeah, we got, the economy is coming back. Everybody's talking about tapering because their economies are so good. We need to produce more oil, which again, more supply would send that, send the price of oil down, which would also kind of, affect this one. I need that spike. I need oil to get involved with it. But again, if oil spikes higher, this continues to drop. If oil gets, a bit weaker, this one goes higher. Right. But more supply, oil prices tank. That's weak for the Canadian dollar. And again, that should provide us a push. So again, I'm looking for this to come back down to this level before all the oil news tomorrow morning. Okay. Dollar Swiss. Well, we talked about this one earlier with Nadex, the Nadex presentation this morning. This morning we were sitting right. There's the 8:30 candle. There's where we were sitting. I mentioned this one going higher, and I said we've been pretty much beaten up in the overnight. Weak dollar, weak dollar, weak dollar, weak dollar, weak dollar. We knew we had some buyers here. We had a little bit of a basing area, and you can see it started chopping back and forth, right? 9:30 comes in, we're here. 10 o'clock comes in, and then bam, off to the races with the dollar. It was a nice push, and again, that was an area we drew. It was about 60 pips in the dollar Swiss. So if you guys don't know, I'm pretty sure all of you do, the morning session we have with Nadex, all you got to do is go to YouTube. Everybody has YouTube. Search Nadex, right? Hit follow, hit the bell notification icon. When we go live in the morning, you'll get a notification on your cell phone if you're driving at work, whatever. If you have your browser up, it'll let you know. This is one of the hot spots we talked about today, and we talked about how at 9:30 the US dollar, the bulls come back in, particularly when we get beat up. And again, this was a 60 pip rally right off of that level. Great little trade setup. It's out now. You're done. You're back up into an area of sellers again. If anything, I would say at this point, look for this to roll in the opposite direction. We've seen this level of basing here in the overnight. We've hit it now in a parabolic base move up. 60 pips is a lot. It's definitely, it's just over the ATR for this pair. So again, a reversal with some profit taking in the dollar, not really unheard of. It's going to be more of a dollar play. We're not going to get a whole lot of help from the Swiss at this point. Their market is closed. Pound yen looks exactly the same. We talked about this one coming down here. Unfortunately, it didn't come all the way down. It did the same thing. Surprise, surprise, 1030 reversal right there. Green candle. We were looking for the 1030 reversal here. It didn't get low enough. It tried. It really, really tried. Unfortunately, that dollar strength came back in at this 930 candle and then it pushed down, and then it left without us. So it did the same thing as the dollar Swiss, and this is going to happen. No harm, no foul, no trade. It didn't go. It gave us up. Gave us what it should have done. I mean, it was a 50 pip mover, and now it's turning. And I would say still probably a parabolic retracement candidate. You can see, look at this, how much time it's spent there. Old Airfin, just top, bottom, 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 bottom. Basing is a bottom, and that's a top, a top, a top. Base, 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 base. Peak out through, peak, top. Peaked out the top, came back in, top, and then boom. So wouldn't be surprised if it goes back, if it comes back into this level, bases again, and tries to peak out. Question is, on the peak out, will that be the next move? Will it come down, peak out, and will we see this from over here? Right? Will it do stop? If it does this, if it just like peaks out and then pushes right back in. Right? It does one of those. All right. All right, let's go across to the commodities. They are pretty fun. We got just a couple minutes to go here. So oil is doing kind of what we talked about, right? Talked about last week was a lot of double doubles, right? We talked about the V formation, right? We had the big double double last week, then another double double, and then we had the V, right? Again, this one was we started high and kind of ended more or less at a low point, right at the open, and then kind of went high. So again, we had the V formation there. This was a V and then a snooze, right? And up and then a snooze, and then kind of the same scenario, right? Mondays was over here, but here's what we had this morning. Kind of a push down, right? The trend was low, and then we kind of peaked at that 8:30 window. Actually, the 9 o'clock window. Actually, this is off by a little bit. This should be there. That should be, yep, there we go. And again, down, up, we're not really changing. Everybody's looking at the API tonight. And again, they're waiting to hear how bad IDA messed up the oil industry. Haven't heard anything today. But here are the factors right now that weigh on oil. One, I would say it's ongoing all day today, is IDA, the destruction that IDA caused, how long the area is going to be shut down, and were any of the production facilities harmed? Haven't heard it yet. Typically, you hear that early. Number two, API report. End of the day today, we will hear, we'll get the forecast for that one. Number three tomorrow is going to be OPEC and OPEC plus meetings. Are they increasing production in September? They're supposed to. If they announce it and people are like, oh yeah, I forgot that they were doing that. Again, also a negative factor on oil. And then tomorrow morning, we have the EIA oil number. All these are extremely important. So again, I think the market is in kind of a wait and see, kind of a hold kind of pattern. Like I said, we can see we got sellers up top. That aggressive area, we tagged it here. We tagged it here at the European Open. We didn't make it, and it started the reverse. I think if we go up and end there when we get the API report, it could be a potential area that we're looking for shorts, as well as I marked off these touches, right? We talked about how, here, I'll delete them now, but we talked about how we had some basing in here, right? Again, if I drew that area of interest, I can kind of draw it right here and say, hey, listen, we had area of interest here. We kind of touched it. We touched it. We kind of peaked and used it as a bottom. We based in it again. We touched it again. We touched it again. We touched it again. We touched it again. If we come through a break on the downside, there's also a potential that this one kind of starts to fall as well. And again, what factors would we need to do that? See that? API, I mean, again, it would basically require no news of the of IDA messing up, the Gulf. It could be an API number tonight that is bad for oil with supply. It could be OPEC Plus talking tomorrow about how they are going forward because prices up in the 70s. The EU talking about how inflation is big. The ECB talking about we're in a position to start talking about reducing pandemic aid. All of these things are talking about demand returning. Demand returning. We need more oil, right? We need more oil. OPEC Plus knows that, right? And again, that's why I think if they go through with it. All right. But yeah, right now I would say this one probably looks like it more wants to roll come back lower. But again, I think 69.50 is a level that we watch out for. There's an aggressive event. Whoops. I would say there's the more aggressive level here at 69.30. And again, a break of 68.13 again to the downside, I think is also decent. Gold. All right. So Isn't it funny how gold came all the way back down at 9 o'clock this morning and literally wanted to kind of just say, hey, 1800, you still there? All right, I gotcha. And now we're back at the same level. Um, there's kind of like, again, this is kind of that area of interest, right? You know, really, I just put it here, change this to yellow, right? What do I mean by that? What do we do with that? I mean, look, it rode the, bottom, 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 bottom. Look, base, 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 bottom, came back up, top again, base, 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 came up, topped again, topped again. So as far as clean entry goes, there's an 1830 up top. There is a level down here at 1775. I think we're going to have a hard time getting out of this kind of current level. If you're looking for kind of shorter term things, I would say that this is a level right here that you could potentially use for shorts. That level is coming in at 1819. Reason why I like the way that candle formed. I like the body positioning and how wide it was. It got front run, so we do know that there are some sellers up in that level. Tomorrow is kind of one of those days, right? ISM Manufacturing, you can see it here. It's a level diffusion index based on surveys purchasing in the industry, and it's considered like a leading economic indicator. It's kind of one of those things. It's like, I mean, is it going to be good? Is it not going to be good? Is it going to be inflation in there? It's like, oh. So it is a level. If it is negative tomorrow and we are sitting, again, that level is coming in tomorrow right over here, right? That does provide a little bit of opportunity to take this one short. ISM is expected to be lower than it was before. If this comes in at like a 54, 56, that should be one of those triggers to kind of set gold down. And it's coming in tomorrow at 10 a.m. Right there. So if we're able to maintain and kind of just, float around a little bit, I think 18, 19 tomorrow could provide some interesting opportunity. It is one that I think you should look at short duration binary contracts. I don't know how much premium is going to be baked into them tomorrow. Again, the premium is kind of how much volatility I think is going to be associated with it. I think it could be a good short duration contract. Look out for it, watch for it. But I think it could be a good level for tomorrow because if it is negative, I do believe gold will take a shot to the downside. Question is the European market going to shoot us, up and then back down again to the 1800? That's what I don't know. So you have to see and kind of play that one by ear. Looking at silver. Silver looks exactly the same. Silver, we had the level, and again, I'll keep moving it across, but we're looking for price to come up to 24.28. Silver came down and it did hit a wick over wick. I wouldn't say that it's at the ideal, kind of the ideal spot. I would say watch for some buyers kind of coming in at this level here at 23.47. 23.47-ish. But right now, I mean, it's really just kind of, right? I mean, here's last week. We closed right here. We opened here, poked up, came back. I mean, the dotted line is where the close was. We're literally pushing right back to the close from Friday, right at that $24 mark. So $24 is going to be kind of a magnetic attraction with that price of silver. Silver also definitely get in there tomorrow. If inflation is bad, silver will move more than gold. It should move about twice as far. So look for that as a potential opportunity for tomorrow. And then last but not least, let's go over and look at natural gas. Now, natural gas's inventory reports. As you can see, this one kind of peaked up into a higher level at $4.46. I can tell you right now the reason why that this has gone up. It has nothing to do with weather. You can see that it's been much, much lower, right? And now all of a sudden it's up here. The entire reason why price is up right now is because I need to refill my propane tank. No, it's not. That's not the actual reason. But every time I need to refill my propane tank, it goes from like low, like 3.5 all the way to above 4. And then I'll call my propane guy and it's like, hey, you should wait like another month because the price has just spiked. I'm like, I know. There's a guy out there that looks at my gauge, and when it gets low, he calls a guy, and then they jack the price over 4.5. Every time it happens to me. But it did turn from a level, and what I mean by that is, again, on a technical basis, you guys can see an easy gap here between the 26th and 27th. There's a gap right there, and you can see we hit the gap and took off. Again, telltale sign there's buyers in there. Came down again, touched it, took off. Same scenario here, 8:30 this morning. What did we do? We hit the same gap level and bam, took off from it again. At this point, I would look for this one to probably roll and come back down again. It's got a decent, again, if you're not trading this one, you're like, oh, it's 14 cents. Yeah, 14 cents is quite a substantial move in this one. I would say come back down again. And again, is this a level we can use? I would be a bit more cautious with it. Again, it's already hit 3 touches. You guys, number 4 is the no touch for me. That's where it tends to break. Could we get all the way back down to the $3.90? God, I hope so. But natural gas inventory is Thursday at 10:30 a.m. Eastern Standard Time. The first, again, 2 days to go. Tomorrow with oil and again, their forecasts and the statements that OPEC makes will obviously affect us a little bit. So it's 48 hours in advance is a little bit too hard to do it. But I would say, again, watch out. I'll move this a little bit higher, but watch out for this level up top. I'll just copy it. It's probably easier. Whoops. All right, there. I'd say watch out for that level at $4.49. I really hope it doesn't stay up there. If you want to take the opposite end, if you guys want to draw kind of the curve top to bottom, I would say you can use probably use that as a curve right now. So you can see anything up higher is a potential area to short. And again, small level here. If you really want to kind of mark off some basing and cover all your bases, you could say that, hey, listen, there's a little bit more of an aggressive level there that I want to take. Sure, you could. But if anything, I would say this was a green. But I would say at this point, this is probably coming back down to a yellow. There's a little bit right here. I would say there's a little bit of a group right here. But that could be an area where we take a Harry Potter bounce off of it. We could break through that level, touch it, go back up again, and then collapse through. So, but yeah, this one is up 1.44%. Oil right now, as great as oil looks, it's only down 0.55. So as cool as oil looks, natural gas is like I'm horrible at analogies. Like that was the test. I failed every single year. But natural gas is to oil as silver is to gold. It tends to be more volatile and have a higher beta, right? Provide some great opportunity. Last week we mentioned on Thursday, don't sleep on natural gas. It's going to be a big trade, and it was a big trade. Here's natural gas last week, right? In one candle. This is the inventory. That's what really set it off. It was in a channel, and boom, it took off. So now inventory is a real thing for natural gas. So, all right. With that said, that was the end of all the commodities out there. That is it for our presentation today. Please make sure you mark off next week, September 7th. I cannot believe I'm saying September 7th at 12 p.m. Eastern. I know that it is a holiday for some. Markets, I believe, I'm pretty sure markets are open because Labor Day is Monday. Tuesday is a Jewish holiday, but I believe the markets are open. As long as they are open. And again, Todd, you can correct me if you're on there, if you can hear it. I'm pretty sure we are on next week, Saturday. I'm sorry, not Saturday. September 7th, 12 p.m. Eastern time. If not, again, just catch us in the morning. We'll be on tomorrow morning, and we'll be looking for oil inventory setups in the morning. All right?
Yeah, we'll be there.
So that's it.
We'll be there.
We'll be there. All right, sounds good. Cool. Todd said it. You guys heard it here first. We're on next Tuesday as well. All right, so I'll catch you guys later. You guys have a great trading day and trading week. And, for those of you that watch the morning session, we'll see you then. Take care.